My home buyer almost threw away $17,000. So first, some context. This buyer was not wanting to put in more than one home loan application. They put in the first one, and it came back with high expenses. They weren't sure if they were going to be able to cover all the cash needed to close on the property. They might have had to liquidate a little bit of their retirement, which they did not want to do. I advised them, don't. And so they were going to give up. But I just said, this bank has some good programs right now. You should check them out and see. And they were pushing back. They didn't want to do it. So eventually I convinced them, just apply, see what happens. It doesn't hurt. And they were approved for down payment assistance and a closing cost grant. Now, I'll explain what those two things are. Down payment assistance is what it sounds like. It's assistance for your down payment. And it's most known in typically first-time home buyers and people with a lower income. That's notoriously what it's for, but it can apply to almost anyone. Depending on the bank, some banks offer it, some banks don't. So it's worth asking. So the difference between those two things is that down payment assistance is typically going to cover some of your down payment in the form of a loan. So let's say you are going to bring 5% down and you get a down payment assistance loan of 5%. You basically have two loans, one for 95% and one for 5%. And that's the assistance is you bring less cash to buy the property, but now you have a second loan that you have to pay back. A closing cost grant, on the other hand, is like a grant when you're going through college. It's money that goes towards something and you don't have to pay back. So for example, Pell Grants in college are the ones that I know about. If you apply for a Pell Grant and you qualify, you get $3,000 a year and you don't have to pay anyone back. It's not a loan, it's a grant, and once it's gone, then great, that's it. So down payment assistance sometimes is a loan, sometimes is not, but a grant is never a loan. That's a good distinguishment between the two. So why do these exist? The first reason is to get more people to qualify for home buying. A lot of them are set up by the government to encourage home sales. So, for example, the real estate market took a big turn in 2009 and no one wanted to buy homes because the real estate markets had fallen so much, no one wanted to get into it. So they put in first-time home buyer grants at that time. If you're buying your first home, here's $5,000, $10,000 to help you buy your first home. So the government did that as a way to prop up the industry. And in that case, it worked because a lot more first-time home buyers were able to afford their homes because the government was helping them out. The closing cost grants that I'm familiar with today that my buyers have used in the past are helping people with lower incomes buy homes in a specific area. So it's mostly targeting homes in areas where they are a little more worn down, and the government is basically saying, here's some extra cash, please fix this up. Because if you fix it up, then we will increase property taxes, we'll make more money, you'll make more money. So that's the reason. So on these ones specifically, the question is who qualifies? There's quite a few first-time home buyer grants available. So you need to make sure that whatever lender you're working with informs you on these grants, because it's just like when you're going to college, there's a million grants out there and not all of them get used. There's a million scholarships out there to pursue a degree and millions of them don't get paid out every year. So first you need to have a lender that is aware and can help you navigate that process. In terms of the type of people that will qualify, typically you'll either have first-time home buyers, people within a certain income threshold, or a property located in a specific area. For example, this one grant that my buyers have used in the past, The median income in this neighborhood needs to be 75% of the median income in the whole city. So let's say that the median income in Austin is 100,000 a year. This neighborhood needs to have a median income of 75,000 a year. And if your income falls within a certain threshold, then you qualify for this grant. Now, every grant and every down payment assistance program is different. So that's why there's no hard and fast rule. Everyone is totally different. Some are only first-time home buyers. Some are specifically based on income. Some might be on the size of your household. So there's a million out there, and you need to have a lender that's familiar and can help direct you. I hear people asking what extra is required of me to get these. Sometimes it's as simple as filling out a form. Sometimes, especially for the ones by the Texas State Housing Commission, those ones you have to take a couple home buying courses. It's like an online course that takes 5 hours basically. And if you complete that, then you qualify and you fill out the application and you get it. So again, it depends a little, some are a lot, but it's never not worth it from what I've seen. Another question I get is, what are the terms? So some of them limits what you can use the money for. So can you use it for the down payment? Can you use it for the closing costs? In terms of the down payment assistance, some of them, like I said, are a loan. So it's like a 5-year loan, 0% interest, and then the loan is paid off or something along those lines. So the terms differ depending on a grant versus down payment assistance. And then each grant obviously is different as well. And the last question I get a lot is, why would I want to go through the hassle of filling out this other paperwork, doing this online course, and going through it? This goes right back to the story that I started this out with. This buyer wanted to give up buying a house, and they didn't think they could afford one. They didn't have the cash. They were going to save up another year. They're going to rent out their apartment for 1 more year. And they apply for these grants. They get $17,000 to go towards their down payment and their closing costs. The crazy thing is, this buyer, when you initially put in offers on homes, you have to put down a deposit once the offer is accepted. And this buyer, when they got to closing, the grants covered all of their closing costs, most of their down payment, and so they got a check back for part of that deposit. So when they got to closing, they got a check back, giving them some of their money back. So because of this, they were able to save $17,000, buy a house 1 year before they thought they could, and start down that path that they were really wanting to. So that is the power of down payment assistance and grants programs. So if you have any questions about it, I know some great lenders. I have some experience, but I'm not the most knowledgeable on it, but I'm happy to help.